Hello and welcome everyone to Silver Asset of the Day for the 25th of June 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we get towards the end of the week here, what do you need to be aware of? Well, we've just had in the USA 1.2 trillion in infrastructure spending agreed. So as you would imagine, we've seen commodities over the course of this week have that slingshot move higher. We discussed with you on the week ahead commodity report. We've seen palladium, platinum and copper prices all break out. In fact, over this week so far with our clients, we've banked over 2,000 points profit across gold, platinum, palladium, and it's been a great end to the month so far. So of course, for 2,000 points profit, for every 10 lots that you'd be trading, that's $200,000 of profit. And for every one lot that you'd be trading, that's $20,000 of profit. But it doesn't end there. So right now we actually have two positions on palladium, which are currently up over 3,000 points profit. Also have multiple positions on the energies, which are currently up over 8,000 points. So currently we have over 10,000 points of profit that we're looking to bank as we move into the end of the month and then into July as well. So with that, that brings me over to what to expect as we go into July, what to look at here for silver prices. So first of all, silver prices in terms of the overall hedge fund and money manager positions right now, overall net long positions currently stand at over 70% net long. So what that means is hedge funds and money managers that have a position on silver, over 70% currently are net long this market. Going into next week, we also have Basel III regulation, which will kick in for Europe on Monday, and then on Thursday, it will kick in for the USA, which will essentially have big implications moving forward for the gold and silver market. And of course, the next quarter is going to kick off from next Thursday, the 1st of July. And I would look out for fresh capital to come into the market, being that we have a new quarter. But what to look out for over the next few days is as follows. So first of all, Friday, we have inflation data. Watch out for volatility on that. And we have several Fed members which are scheduled to speak later on in the session tomorrow as well. And then going into next week, we do have contract settlement on Monday. We're getting towards the end of a quarter next week, so you can expect volatility in the lead up to that. So in the lead up basically to Wednesday, last day of Q2. And then on the 1st of July is Thursday, where I would expect new capital, fresh capital to come into the market, being a new quarter. And as we transition into July and the third quarter, this is typically supportive for the metals. As we've identified with you so many times now, we've been buying on all of these dips over the last week with commodities, platinum, palladium, copper, gold, silver. As you know, commodities that don't move up in a straight line. We're taking advantage of the recent dip in order to position ourselves further to capitalize on the slingshot move higher that we've seen over this week. Already, many of those positions that we took on Friday and Monday this week, they've already been protected. We bank partial profits and we're allowing the rest of those trades to run up a lot of profit for us. Now, in terms of silver, right now, silver prices, they're consolidating just under $26 per ounce. You've got support coming in at $25.50 and of course resistance at the moment at the upper end of the range currently, which is at 26 in a very short term, but overall range is up towards $28.50 per ounce. I perceive below $26 per ounce down towards 25 as a good area to accumulate positions. Obviously, the lower you can get, the better, but our expectation is that silver will do very well as we go into the next quarter. So again, we do perceive $26 per ounce or lower as a good buy the dip opportunity at the moment for this market. Now, unfortunately, many traders out there with a recent sell-off that we've seen over the last week, they've got quite bearish on commodities. They've either exited out of their long position or they've panic sold right at the lows, only to see this significant bounce higher that we've seen so far this week on industrial metals in particular. It's still not too late for you. However, what I would say is you want to really ditch those outdated technical strategies, gimmicky indicators, and make sure that you're utilizing a lot more market intelligence, data analysis, facts, the statistics in the markets will help you massively to get an edge. This, of course, is where you want to be trading the same way that the hedge funds, money managers, banks and institutions are really capitalized on the current events we have right now. We've got inflation running hot. You have, of course, all of this stimulus to be agreed in the USA. Another 1.2 trillion of infrastructure has just been agreed. That set palladium, copper, platinum prices higher. Even right now, as I talk, they're gaining momentum to the upside off the back of that news. So it's going to be full of back-to-back opportunities as we go into the next quarter. I don't want you to miss out. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, where you'll be utilizing the same approach that the hedge funds, money managers, banks and institutions are, then there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.